The first stock to watch out for will be Mahindra & Mahindra, and the company informed the stock exchanges after the market hours that they will be shutting down their key plants which are there for production of tractors. They will be shutting down the Jaipur tractor plant for 5 days and the Rudrapur tractor plant for 2 days. The total production cut is undertaken to rationalize the inventory which the company is sitting on, and the slowdown which is hitting the tractor sales. And since the last 2 or 3 months, the tractor sales for Mahindra & Mahindra are coming in the range of 15 to 16,000 versus 18,000 as earlier estimated by most of the analysts. So this is more of a production cut to rationalize the inventory. However, the company says the availability of tractor will not be an issue. The step is taken to rationalize the inventory levels. Also talking about financial major IFCI, and the government of India is looking to divest a majority stake in the company. We had the news report earlier, but this time the finance ministry official has confirmed the development that they are consulting various departments involved in the stake sale process, and they would like to divest a majority stake in IFCI. The analyst estimate for the stake sale would be at a premium of nearly 20 to 25% to the current market price. So let's see how the stock reacts to this particular news bit, where the government of India holds close to 55.6% stake. Talking about BGR Energy, and there were news reports earlier that the company might sell its stake in the joint venture with Hitachi to L&T Mitsubishi, but the company had come out with a denial on the stock exchanges, stating that there is no interest as of now to sell any kind of a stake in the joint venture that they have. And talking about Global Spirits, and do remember the board had recommended and was planning to issue preference shares to Templeton Mutual Fund and the promoters, and finally yesterday after the board meeting they have approved a preferential issue to Templeton Emerging Market Fund at a price of 140 per share, wherein they will be issuing compulsory convertible shares which are to the tune of 50 lakh shares, and promoters will also be issued 7.63 lakhs warrants at a price of 140, which is a 30-35% premium to the current market price. So let's see how the stock opens post the warrant issue approval.
Well, Bharti Airtel, Manappuram Finance and Steel Authority of India were the three stocks buzzing in trade. The telecom giant tumbled more than 7.5% in trade, backed by 1.7 crore shares, which is 3.6 times on a 2-week average basis, after the 2G court, taking cognizance of the CBI charge sheet, issued summons against Bharti's chairman Sunil Mittal as well as Ravi Rui of SR Group and Asim Ghosh of Hutchison Max, asking them to appear before the court on April 11th regarding their alleged involvement in excess spectrum allocations. The company came out with a statement saying that they were disappointed with the charge sheet and that they will fight it against Sunil Mittal as well as against the company, and this will see some kind of relief coming in for the stock. Next, Manappuram Finance, its shares halted in trade after hitting a lower circuit of 20% after the management in its con call guided for a loss of 50 crore against an expected profit of 90 crore in the fourth quarter, and this is because of under recoveries from gold auctions, where it is seeing some kind of pressure in repayments coming in and they have to sell the gold. This is the pledged gold, and because the prices have corrected, they are seeing under recoveries again on this front. Lastly, SAIL cracked about 3% in trade to touch the lowest level in more than 4 years since December 2008. The EGOM was scheduled to happen on Tuesday regarding the offer for sale floor price, but this has been deferred, and the government sources say that this is likely going to happen in 2 tranches with 5% stake sale and an additional 5% via the green shoe option to see the investor appetite, and the floor price is likely going to be around 60 rupees per share, which is 9% discount from current levels.